Every real estate investor has been there. An opportunity comes up, the numbers look great, but when you approach the bank for financing, they shut you down. Whether it's your debt-to-income ratio, the property type, or inconsistent income, traditional lenders find reasons to say no. But here's the good news. Private lenders don't play by the same rules. They care about the deal, not your personal financial history. And if you understand why banks reject deals, you can bypass the headaches and move forward with private capital that actually gets deals done. Today, we'll break down the top 5 reasons banks deny real estate investors, and how private lending can step in to make your investment a reality. Banks analyze your personal debt-to-income ratio to determine whether you can afford the loan. If you already own multiple properties or carry other debts, your debt-to-income ratio might be too high, even if your real estate deals are profitable. Consider private lending. Private lenders don't care about your W-2 income or debt-to-income ratio. They focus on the property itself, its value, its cash flow potential, and how quickly it can generate a return. If the deal makes sense, you're approved. No personal income requirements. Banks have rigid guidelines. If the property is a fix and flip that needs work, a distressed asset in a rough area, or a mixed use or non-traditional property, they'll simply say no. Private lenders specialize in funding non-traditional real estate investments, fix and flips, distressed properties, short-term rentals. If it has potential, a private lender can fund it. Real estate investors, business owners, and self-employed individuals don't fit into the traditional lending system. Banks want steady paychecks and 2 years of consistent tax returns, something most investors simply don't have. Private lenders don't require W-2 income. They approve loans based on the property's value and cash flow. If the deal works, your employment history doesn't matter. Banks rely heavily on credit scores. If your score isn't high enough, you'll either get denied or be stuck with a bad interest rate. Even a single missed payment from years ago can knock you out of eligibility. Private lenders prioritize asset-based lending. Your credit score is secondary. What matters most is the property's equity and profitability. If the numbers work, the loan is approved. Banks take weeks, sometimes months to approve a loan. If you're trying to grab a hot off-market deal, a foreclosure, or an auction property, waiting on a bank means losing the deal. Private lenders close in days, not weeks. Many can approve your deal within 24 hours and fund in 7 to 10 days. If you need speed, private capital is the answer. If banks have been slowing you down, it's time to take control. Here's how to secure private lending for your next real estate deal. Step 1. Find a reputable private lender. Not all private lenders are the same. Look for lenders who specialize in real estate investing, have a track record of closing fast, and offer flexible terms. Step 2. Bring a strong deal to the table. Private lenders don't care about your job history or tax returns. They care about the deal. Run your numbers, purchase price, rehab costs, after repair value, ARV, and expected cash flow. If the deal makes sense, funding is available. Step 3. Close fast and scale up. Once approved, private lenders move quickly. Many investors use private capital to fund their first deal, refinance into a long-term loan, and repeat the process to scale their portfolio. Smart investors know that banks are not built for real estate investing. They're slow, rigid, and often reject great deals for reasons that don't make sense. Private lenders are built for investors. They focus on speed, asset value, and deal profitability, not your personal credit or income history. Need funding for your next deal? Phoenix Funded provides fast, flexible private lending designed for real estate investors who need to move quickly. Apply now at phoenixfunded.com and get pre-approved today. Have banks ever blocked a great deal for you? Share your experience in the comments.